I'm Ashton Addison from Blockwest Capital for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Warren Paul Anderson, the VP of Product at Discreet Labs, the team behind Findora. Warren, welcome to the show, and thank you for taking the time to come on.
Thanks a lot for having me, Ashton. Excited to be here.
Yeah, I'm excited to dive into this discussion. I first spoke with Findora over a year ago, and I know your team has been working on quite a lot in a year and a half, really, since we last spoke. I would love to get the viewers up to speed by just getting an overview and a high-level solutions of what Findora is working on and what the team at Discreet Labs is focused on with Findora.
Yeah, sure. So Findora is, layer one blockchain with programmable privacy. One of the teams that's working on is Discreet Labs. Discreet Labs has actually grown to over 60 people based in both North America and Asia. And Discreet Labs kind of maintains a lot of the code base related to Findora using the programmable privacy. And how we use programmable privacy, we'll probably get into in a little bit, but we basically use a few different technologies, one called zero knowledge proofs and the other called multi-party computation. And these are kind of fringe technologies that have found their way into the blockchain space. And we anticipate them being used a lot more to do things like, preserve privacy for users.
Definitely. And yeah, I have heard of both of those, but most of the time, people just hear zero knowledge proofs and they just think, okay, zero knowledge, like it must be good. I don't really know about the intricacies of, and sometimes you don't need to know exactly how, but it's great to get, sort of a high level. I would love, if you could talk a little bit about the problems in blockchain right now and in preserving privacy and identity management, in why technologies like zero knowledge proofs and secure MPC are needed, in the way that blockchains currently run. Are people's information really vulnerable to hackers and just public blockchain information, or like why is that technology necessary to bring in with Findora?
Yeah, it's something we've identified, some privacy issues in the blockchain space, but also they kind of apply to, all of the digital economy that's growing. There's three particular problems in blockchain. One was a user privacy problem. So we are seeing, lots and lots of, these transactions that are on some of these blockchains they're not anonymous. They're actually semi-anonymous and what they call pseudo-anonymous. And they're becoming less anonymous, as time goes on. So as people, create more exchange accounts, they leave their identity information through a process called KYC, or Know Your Customer. That's effectively like putting a fingerprint on the blockchain, right? The more times they do that, the more fingerprints they leave. So, and that's okay if, that information is in the hands of the right people, but it's not okay if it gets in the hands of the wrong people. So definitely there's going to be continued user privacy issues because these transactions are radically transparent. Another one is actually more along the lines of a liquidity issue. So, because these transactions are so transparent, what we're seeing is a lot of the institutional capital that's, sitting on Wall Street. We're talking in the order of, trillions of dollars, that's just trading, throughout the day, is actually kind of sitting on the sidelines because they want to enter into this space, but they don't want to reveal the competitive intelligence that they protect by banking with regular traditional financial institutions. It's not great that a competitor knows your bank balance or knows your crypto balance, right? And everyone knows that Tesla bought $1.5 billion worth of Bitcoin. But everyone's also going to know when Tesla sells $1.5 billion worth of Bitcoin. So, with transparency comes, concerns around privacy and, actual competitive intelligence that gets revealed. So those are two really big problems that we found. And they're not going to get any better as crypto becomes more mainstream. These problems become more ubiquitous, And so really we wanted to build something, using zero knowledge proofs that we could actually help preserve the privacy without, reducing the actual integrity of the core blockchain.
Definitely. And yeah, it's funny how, retail investors, they're not so concerned about, they're more concerned about, what price did I buy Bitcoin at? And then when large institutions come in with trillions of dollars, there's so many more variables of like, who's going to know when we bought this? At what time should we buy it? Where should we move the money from? Where should we store it? And with fully decentralized public blockchains, that can all be seen. If they see the transaction of where they bought it, then you can see their balance. And if they move it, there's all these whale alert platforms and tracking for blockchain explorers. You can easily see if Tesla starts moving that money before they put out a press release. The second it happens, you can get a notification. So obviously there are some things needed for these large institutions and just for general privacy as well, to be able to, sort of protect some of that information. And you mentioned there's zero knowledge proofs. Can you talk a little bit about, what exactly does zero knowledge proofs do? And if you are a large institution that's going to make a big purchase or try to hide information, how exactly does zero knowledge proofs help with that?
Yeah, sure. So zero knowledge proofs are something that were invented actually several decades ago. It's a cryptographic method that allows you to effectively share information without actually showing it. And so we call it kind of sharing without showing. And concretely, what that means is, if I wanted to prove to you that I was, over the age of 21, typically in the real world, I'd have to just show you my ID and you look at my ID, but then you also see where I live. You see, all the other information that's on that ID that isn't relevant to my age, right? And with the zero knowledge proof, actually, what I can do is just show you a proof that I'm actually over 21 or over, and you can compute that proof, verify that proof, and then we know that that's a legitimate statement that I'm over 21. And what's nice about that is that I actually don't have to reveal my actual age. I only have to reveal that I'm over 21. So that kind of process, applied to lots of different use cases in financial technology, especially, is becoming, really, really useful. So they're being used now to do a lot of scalability, on different networks by basically they're compressing a lot of the blockchain data into a very succinct form and being able to show a proof that this is valid, and then you can kind of verify the actual information from that proof. But we're also, Discreet Labs is using zero knowledge proofs, particularly for privacy. So being able to use that same kind of technology to prove that these transactions are actually happening without actually revealing them.
Very cool. And I know we spoke, quite a while ago, but I believe the platform is already in development. Can you talk about when Findora started, what you've been working on, and where you're at right now?
Yeah, sure. So I joined the team in mid-March. We were right then we were about to launch what we're called Mainnet beta, which we did at the end of March. And the phase right now is the network is a mainnet beta, which we're basically it's a stripped down version of of an existing network. It has very simple transaction types, being able to send and receive the native token FRA both confidentially and transparently. And then also you can issue tokens similar like how you would on Ethereum, and create tokens actually both confidentially and transparently. So that's a pretty interesting kind of use case, because that would allow for something like stable coins and private stable coins to be issued on Findora, and other types of assets. So that's kind of the basis right now of what the Findora mainnet looks like. We have a couple months ago, we released proof of stake, staking on testnet. So it's running, the fully, staking with delegation, because Findora actually runs the Tendermint consensus. So we're able to inherit a lot of the robustness of the Tendermint consensus mechanism to allow for proof of stake. So on testnet, we're running staking. We expect to, push that into mainnet in the next couple of months. And then we are about to roll out actually another kind of developer network that is going to have essentially the latest kind of beta releases coming out that will be deployed on both testnet and mainnet.
Wow, very cool. And it's great to hear that you can also create an ecosystem inside of Findora, create native assets that have that privacy preserving structure as well. That's really interesting, and I'm excited to see how that plays out. I think the developer ecosystem is going to be a great addition and something that's needed to help bring more people in to help develop on your platform, because there's so many protocols coming out with different developer environments, and really it's about making it easy for developers to start working on Findora. And I'm curious, you have this full ecosystem with Findora and the ability to create tokens, but I'm guessing that I've spoken to the Tendermint and Cosmos team, and I know they're all about like the inner blockchain communication and working with other blockchains. If an institution is trying to buy Bitcoin or Ethereum or something that's not related to the Findora Layer 1 protocol specifically, does the technology privacy preserving, does that apply to any kind of transactions outside of Findora as well?
It's a really good question. So the vision is, yes, we want to apply Findora's zero knowledge proof kind of privacy preserving technology to other blockchains, and that's really kind of the pillar that we're standing on with interoperability, being able to do cross chain interoperability. But the vision is the execution is much more difficult than the vision, right? Because a lot of these networks. The Findora blockchain is a UTXO based blockchain, which lends itself better to preserving privacy, because it's effectively a stateless blockchain. There's no actual state that's being stored, so you can actually wrap that into a privacy preserving protocol. Most of the other networks are becoming more and more stateful. So Ethereum is an account based network. So bringing privacy to Ethereum is actually quite a challenge. But we're going to be releasing some things onto the developer network, here in the next couple weeks that will actually lend itself kind of down that path, because we think that preserving privacy, on Findora first is obviously kind of the first staple, and then the next is starting to introduce that into other networks. But it's a step-by-step process. It's going to involve a lot of critical work on our cryptographers, actually writing, and implementing different zero knowledge proofs for more complex statements, and figuring out some breakthroughs on that field.
Definitely, yeah. Big work in progress, and I can imagine that the Findora ecosystem itself is already a huge task to take on in developing the developer ecosystem, building out a token infrastructure to build tokens on top. I'm also curious more about the FRA native token that you briefly mentioned so far. You mentioned that you can do staking. I'm curious on what else you can do with the Findora token and how it plays a role into the ecosystem and the protocol.
Yeah, so just like most networks, Findora has a native token called FRA. It's primarily used to, as gas to pay fees. It can also be used as the native token to do asset transfer. But what's kind of unique about Findora among the other kind of privacy blockchains is that you can actually issue private tokens. So you mentioned before, that there's Twitter bots, like every time there's a movement of funds. When it applies to stablecoins, for instance, like Tether or USDC, the same rule applies. Every time more Tether is minted, some Twitter bot, publishes how much that is. And that's because, the balances are radically transparent in Tether. But I think most people would prefer that their wallet balance in fiat currency or stable coin isn't revealed. So we expect to see more and more stable coins start to seek out, these privacy blockchains to be able to issue, tokens and maintain a balance in a confidential way so that they're protecting users' privacy. So that's one of the unique properties of Findora as it relates to some of the other privacy blockchains.
Very cool. And you mentioned that the full mainnet's coming up. The mainnet beta is out. Can you talk about what are the major next steps that you and your team are focused on towards the release of the mainnet and just towards the end of the year?
Yeah, sure. So the next few weeks, we expect the testnet to reach sufficient stability for the community to adopt on mainnet, which will include staking and delegation. There's a whole tokenomics model that's been applied to generate APY for stakers and delegators, which will help kind of build more of the ecosystem around around staking. Also, we're going to be introducing more programmability into the network. I won't say exactly which networks we're going to be integrating into first, but we'll just say they're the bigger ones. And we expect to kind of have that kick off more of the cross-chain kind of compatibility, interoperability of different assets, so that we can start to build liquidity bridges, into those networks, with a follow-up to eventually introduce privacy to those networks.
Great to hear, Warren. And for the viewers that are looking to follow along with the release of the mainnet, learn more about Findora, FRA, and get involved in the community, what's the best way for them to get involved?
Probably the best access point is just findora.org. There's a lot of information. The teams are constantly updating, the site to make sure it has the most relevant information. And then, we're on Twitter with Findora Official. So catch us there. Obviously, lots of telegrams, and then our Discord channel is growing, pretty considerably. If you're a developer, you want to get involved in the project.
Sounds great, Warren. I will leave all those links in the description box below as well. All the best on Findora moving forward, and let's follow up in the near future.
Thanks a lot, Ashton.